right, morning of June 24th, 2022. We're live. Tyler, how you feeling about the market this morning?
Hey, morning. Futures gapping up a little over 1%. Bond futures are down some, so rates higher, and oil's up about 2%, peaking over 110. If you look at the juxtaposition of that, that's a very pre I guess 2022 market phenomenon where oil is up, interest rates are lower, or interest rate prices are lower, rates go higher, and stocks like that. So we'll see, what kind of strength we can hold this morning. Recently gaps up have been opportunities to sell and not opportunities to chase. Under no circumstances should you be chasing the screen this morning. I'm not a financial advisor. I am, something of a scientist myself, and I'd be leaving that so far alone. We do have some interesting longs that we're going to talk about. We're gonna focus on oil specifically today. We have some interesting. Our signals have some interesting calls. We actually have a call with some nuance, and then we've done a bunch of other oil studies to kind of inform what we're going to do on oil stocks here.
So Tyler, one question about what you just said though. You mentioned that we're seeing patterns that were common prior to 2022, and this has been such a nonsensical market in so many ways. Does that mean we're starting to go back from these really weird cash infused times, high inflation, and yet at the same time seeing some weakness around some of the typical inflation hedges? Now we're starting to see a more rational market. Is that what you're saying, really?
Well, no, that's actually kind of we'll see. But really what I would expect is that to all reverse itself out, and by the end of the day we'll have oil higher is a risk-off feature at the moment. There was a point where, from -40 to 60, where that was seen as something that was positive for growth. Oil this high is not positive for growth. So it's just kind of, I think the long weekend, everyone's kind of jamming into the door. So we have some, weird positioning going on that I think will work itself out by the end of the day. I would be encouraged though, if at the end of the day we had oil higher, stocks higher, that would be, something that would definitely, interest us. As we said yesterday, we don't see a bottom, until later this fall, but we're so willing to change our mind, at the same speed our data does. So when that does, when the data changes, we'll, happily change our mind.
Yeah. So I was reading this morning, I think it was Wall Street Journal, they were saying gas could go up to $6 a gallon given the demand coming up in the summer months, of course, right?
Yeah, I mean, it's going to be quite something. And the interesting thing about this is at 110, you just kind of have to think about like what is actually priced into oil here. For example, if we have a resolution in the Ukraine, I'm not calling for it. I'm just saying as a for instance, that probably takes oil down pretty significantly. There's a lot of things that if they're fixed, oil goes down pretty significantly. It's not artificial here. This is where, demand meets supply at 110. So there's nothing fake about it. It costs 110 for, to fuel yourself and your country at the moment. And, there are reasons for that, but that's the price. It's not, because somebody wants it there per se. It's where it's clearing. But, the price of oil clears significantly lower if some of these, supply side issues work itself out. So from there, with that in mind, you want to just jump into what we see in oil stocks and oil specifically?
Let's jump in. I do have one more question though. What does it take for oil to go up to 120, 130? Like, what is not yet priced in that would cause oil to continue to go up? And so for me, there was a continuing narrative of I could see oil going up if Ukraine actually, put up a strong resistance against Russia and this went protracted. It really elongated, right? That happened. I could see oil going up if Saudi Arabia didn't really capitulate to what Joe Biden wanted, right? That happened. I could see oil going up if X, Y, and Z. I'm running out of reasons to say I could see oil going up because. What's your thought on that?
Yeah, and I mean, same here. There's nothing. Once we fix the supply side things and the market can regulate itself, better, and we have a more accurate view of the market. No, I don't think 125 or 130 is realistic unless we decide there's a scenario in which this isn't going to end. We're just, there's no plans to boost production in the U.S. In the next 5 years, because I think that is kind of keeping a cap on prices. Is eventually there's a pain point, right, where you just have to do it, even though you don't love some of the other things around it. It's a, for lack of a better term, it's a matter of survival, right? Like you want to heat people's homes, you want to all these things. So even if it's politically not great, I do think that there is a pain point, and what will send us much higher is if it becomes clear that there is no pain point. It's just going to keep going, and nobody cares.
I think there are two things that could happen, though. So first, I think we're going to see significant pressure in oil, especially under current political environments, because what you have right now is everyone's saying, "Oh, oil companies, you just need to refine more. You just need to invest more." And things. Why would you invest when the sitting president of the United States? And again, I'm not saying I disagree with his policy or anything like that, but let's think through the world for someone leading an oil company. Why would you invest in further drilling projects when the sitting president is saying, "I want to make sure you fail"? Like Joe Biden won on the promise of saying, "I'm going to see oil end," right? And now he's saying, "Reinvest, build up more infrastructure." What is the NPV of that when all the powers that be want to see you dead in a decade, right?
Right.
Why wouldn't you sit on all your capital, wait for green energy to really pop up in profitability and invest in a big way at that point and transition when it makes economic sense? There's not really much of a reason for big oil to come in and save the day for us right now. If we're talking long term, I don't see a lot of good reasons for them to play ball.
No, and I mean, just from a prisoner's dilemma, they not cooperating is the optimal thing to do here. But
The
you know,
parade.
we'll see how that kind of unfolds over the next 6 months, because ultimately, you don't get reelected if people are cold and hungry, right? You got to be able to heat your house, like all these things. So we'll see. The next, I think, 6 months will tell us a good deal about, the 1 to 2 year trajectory of oil. I think in terms of what the other things that are not specifically demand related are going to be.
Now there is one thing before we go into specific companies. If we're just talking industry, there is one thing I could see pushing oil in a temporary fashion up to 120, 130. And what if you had a major hurricane hit Houston again?
Right. Yes, you do have these shocks. We have it a couple of times a year where natural gas blows out. Because of these events. Yeah, I mean that's totally possible. And actually, to jump into our oil analysis, when we ran the Euclidean distance on oil itself yesterday, which, by the way, this doesn't pertain to Foliko. This is, a markets person and a data scientist just trying to figure stuff out, right? So that, this is you won't find how to do this on Foliko, but this is just something we're trying, as an added benefit to really everybody, ourselves included. So what we found is we expect pretty good strength in oil between today and Friday. So we could see, 115, 118, even 120 by the end of the week. We do see across the components of some of the energy ETFs, we do see some near-term strength. If you asked us, which one we would prefer to trade if we had to trade one this week on a 1 week horizon until Friday, we probably would be long Valero, targeting about 118 by Friday. I do see a pretty decent gap up in VLO, unfortunately. So as I said on the outset, you have 252 trading days a year. There is no reason to chase on this one. That's just one guy's opinion. But we do like the stock, to about 118 on Friday. But what I think is more interesting here is what we have across all the energy ETF components on a 4-week basis, it's flat. So what this is kind of suggesting to us in terms of a price path of oil is higher than lower. So to think about this in a trading, from a trading standpoint, we would look to enter 1 month shorts in some of these oil names. Just looking at Halliburton, for example, Baker Hughes are two that might be candidates for 1 month shorts, on green. So you're selling higher prices, not lower prices, which we prefer to do, especially when entering puts or things like that. And that suggests to us kind of after this 1 week lift in oil, flat to down. We could see back to 100. I think pretty easily here, especially because I think we have some pretty stretched positioning on the long side, as you saw last week. Some of the names fell pretty quickly. I think ExxonMobil had a pretty ugly week. Some of these others have already started to show some weakness. So we have a bit of a nuanced call. We're thinking higher this week, lower over a 4-week time horizon, and then ultimately over, kind of a 3-month window. We do see these ultimately resolving higher. So it's very important to know your time frame here. If you're going to be trading, weekly options with me today, for example, if the situation was right, I would look to enter Valero. I'm not entering on a 2.5% gap up. That's just not a good idea. But I will be looking to buy some puts in some of these names, hopefully at higher prices throughout this week, expecting lower prices over the next 4. And then we'll kind of reassess after that. We are bullish after 4 weeks here. So this is kind of there's a short-term long, a medium-term short, and then we'll get back in front of you after that time and discuss, what went right, what went wrong, and what we plan to do next about it.
What I think is interesting about energy. So here we have health scores across the entire sector, right? And remember, energy is not just oil. There's a whole bunch of other companies in there, in the ecosystem, in solar, everything like that, right? But generally, we see this roller coaster ride of some deep downs, and then it hovers. Deep down, improves. Deep down, and now we're on this cycle again where we're seeing improvement in those health scores, and with that, improvement in the overall index as a whole. And so we come in, and since June 7th, this sector has just taken a beating, Tyler. Just taken a beating. What is going on since June 7th, and why is that halting? So, I mean, look at this momentum coming into this week from June 7th. Orange line being the sector, green line being the market. And you can see there is correlation with the market. So, you can't put all of this to just energy is going down. The whole market has been struggling ever since that CPI 8.6. But, I mean, what is it that's really stopping this bullet train down?
Well, I mean, really, you need oil prices to release to ultimately have a topping scenario where XOM goes back to say 75 or something, where we really can follow through and push it lower. But as long as oil's above 100, you can't beat these things up too much. So there is a little bit of correlation there because of just the insane. They're just insanely more profitable at 100 than they are at -40. I mean, it doesn't take a genius to figure that out.
Well, what are they doing with the profits? So what's interesting is to see the distinction between what big tech did with profits and now what big energy is doing with profits, right? So big tech was, I mean, they did return a lot of capital to shareholders. There was a lot of share buybacks and things like that. But at the same time, massive reinvestment into what I would call moonshot projects. That's where we saw enormous carving out for the metaverse. We saw a whole bunch into self-driving cars. We saw at one point internet beaming from hot air balloons, right? Like some of these outlandish ideas getting a whole bunch of capital, and some of them panning out, some of them not, because tech is fueled by the next, right? Energy, I mean, energy is the past, or at least big oil, right? A lot of energy. And so you would think in this time we would see a massive boom of investment into reinventing itself. But what's happening with solar?
Right. Yeah. I mean, to that point, I think I forget which head of one of the oil majors wrote to Biden and basically was like, shareholders first. You weren't concerned about our shareholders that in 2016 when oil was at -40, and now that it's 100. We have to show them that their faith has been justified. Otherwise, what a silly hold, right? Like if ultimately when times turn, shareholders don't get rewarded, what's the point of holding the stock? That's literally the whole point.
Yep. Yeah. I thought that was pretty incredible. Biden's letter out to the big energy. Again, I'm really excited for the future of energy being clean, being abundant, being available to everybody around the world. I think that's exciting, right? So yes, move forward into the future, but at the same time, I think that by and large, the powers that be have forgotten we still need energy. I mean, look at what's happening in Germany.
Right. We have needs right now, and it's great to work on the future, and we want to have a better technologies and cleaner energy and better ways to do it. We want it to be more efficient, but we're so obviously not there. It's painful. I mean, if you look at solar stocks, they've fallen off a bridge because it clearly is just not economical at the scale we wish it was. If everyone just threw solar tiles on top of their ceilings, it would be fit. But for some reason, we're not there yet, right?
Why aren't we there, Tyler? I don't get it. I don't get it.
I mean,
Why is solar
certainly not a solar expert, but it's just back to it's not economical. Not everyone can afford to put them on the roof. You have, do you get enough sun where you are? There's a lot of things. It's not
what's a good
just
solar
like
ticker? What's a good solar ticker? What's a good solar ticker? Let's take a look.
there's let's see, one of the darlings of the run up was JKS. I believe it was a Chinese solar name.
Not on our coverage list.
JKS. PAN is the ETF. Let's see what its top holdings are aside from that.
SEDG. Do you know them?
Yeah, Solar Edge, Enphase, EMPH is the other one.
All right, let's take a look at Solar Edge. I'm gonna bring this back in. All right, Solar Edge. I mean, look at that. Look at that. We're talking about this 4-week flat to an upside. Solar Edge. I mean, they're just down. And look at 2022. They have struggled to make any gains permanent. I mean, you had a little bit of a rally in March where a lot of people, myself included, by the way, said now's the time for solar, right? And then from March down to beginning May, just terrible. And look at the health factors, not doing great at all. And I'm wondering, look at this, buy now, pay later, right?
What a disaster.
I'm wondering if there's a lot of issues with the fact that interest rates have not been kind to an industry that requires significant consumer upfront spending.
Yeah, I mean, yeah, to be long your own energy on leverage is a strong move to say the least. Right, like
really
it's so expensive that you have to take out a loan. There's your answer, right? Like, I mean, we're almost at that point to fill your car with gas, by the way, but like we're all the way there on solar. You literally need a loan to put those tiles on your roof. So we have some issues in the short term, right? Ultimately, the Teslas of the world and these kind of companies will figure out how to reduce the footprint, but we're clearly just not there. That's what the markets have been telling you. Oil has moved $148 off the lows. I mean, what else can I say?
And so in essence, what we're seeing here, if I can interpret, is no one expects oil to stay this high in the long term, and yet solar purchases right now would be a long-term investment on something that it's extremely expensive to get that kind of capital for consumers. So it's not making people budge. You would have to have the market. I would say the market is expecting oil to drop.
Or just moderate. I think we'd be shocked to see a rate of change similar to what we just had. So that'll be the question is, it's almost not even about the outright level at this point. It's about how fast it moves in either direction. Because I think, just some stability here probably is bad for energy stocks. I think there's a lot of, somewhat higher prices priced in there. So it's interesting. There's a world that exists that, in a year, 2 years, like oil's back at 85. So, those energy stocks, like they pay a dividend, they'd be an interesting, part of a portfolio from that standpoint. But in terms of like being long for the growth, I think we're at least exhausted there. We could have another leg up, but at least over the next, call it until the end of July, I wouldn't be buying on a medium or long-term basis.
And actually backing up what you're just saying here, our comps, our health score comps analysis is showing end of July, there's some real strength there. I mean, look at this. So some very temporary weakness as we build up to that end of July, beginning August strength. And actually, you know what? So this is SEDG, Solar Edge. I'm seeing a pretty strong picture here in the comps. We go out to the 10-week picture. Look at this 10-week mapping of their health scores. I mean, we saw, I would say, a local bottom beginning April up to mid-June. I think that shows an industry that might have some promise in the future. I don't know. We'll have to
we did take a good amount of air out of the sails, if nothing else, right? So the level has improved. It's just a matter of, these things, especially solar, was such a hot category to be involved in. So when it's out of favor, I talked about, like negative risk premium yesterday, because everyone's out. When everyone's in, it's got a positive risk premium. It can trade, significantly above fair value just because people need to be long. When the whole world's divesting and getting stopped out, the opposite, it works the opposite. So we could see it potentially lag what our fundamentals are showing, just because everyone's taken such a tattooing on the long side on these things. So basically what we see is, it's interesting because we see solar and energy stocks all kind of bottoming together. Right? Like, end of July, we, that expires our 4-week, bearish view on oil stocks specifically. That would expire by the looks of it, a pretty bearish view on some of those solar companies. So, we'll definitely check back in a month to let you know if our data holds constant. I mean, we're going to want to, come in and look at some longs and recommend those stocks.
And for me, I see it as our 4-week on the oils. I think that there's strong evidence showing that I would want to do a 4-week reeval on the solar. Yes. That's what I would want to do before I'm jumping into that pool. I want to do a reeval, but it's definitely something to check back in with. Yeah. All right, Tyler, I got to go make some trades. Market's about to kick off. What are you looking at for today?
So, like I mentioned yesterday, our favorite pick of any stock, any place, anytime, right now is actually Rite Aid, which is reporting on Thursday. So we'll be very excited to see those earnings. We actually have almost 40% upside over the next 3 months. So that's not like that's a non-trivial call. That's if we're anywhere near right, that's a pretty big deal. That trade pays however you put it on, right? That would be a very, very big move. We don't think it's that unrealistic. And that's the thing, the very interesting thing about these models, right? We keep saying sometimes they spit out these forecasts that, you either don't want to believe or you can't believe, or some combination of both. And, since my time here, it's been pretty eye-opening. We go back to the semis thing all the time, but
that was wild.
They just completely fell apart, right exactly when Foliko said they were going to. So, that was pretty eye-opening for me. So, we'll continue to monitor this, go Rite Aid, and we'll be back at you tomorrow.
One last question for you. Last thought, Tyler. Rite Aid, are they trying to pump up short-term strength to boost their valuation for a better acquisition deal than what they got before? $860 million bid before. Are they trying to have a good quarter so they can get up to what, 1.3, 1.5 bill?
God, I hope so. And that's definitely what our data shows. We have some very positive earnings metrics that have come off the bottom. So yeah, I think we're one buyout offer away from at least approaching that target.
Yep.
So it's very interesting. It'll be a very interesting week in terms of earnings, and the follow-on will be fascinating. But that's the one we're watching most closely, I'd say.
Yep. Great. All right, man. I gotta go make some trades.
All right. Talk to you
Talk
later.
to everyone tomorrow. Tomorrow we're hitting healthcare. So be back same time, same place.
Absolutely.
Bye.